Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two strong buy ETFs with big exposure to the Magnificent 7. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two ETFs that have a big concentration in the Magnificent 7. Those, of course, are 7 of the biggest names in tech and include Apple, Amazon, Microsoft, Meta Platforms, Alphabet or Google, Tesla, and Nvidia. These mega cap companies have a combined market cap of about $13 trillion, and a handful of them are also reporting earnings this week. So all eyes will be on not only how they performed in the most recent quarter, but what the companies are predicting for the future as well. Today, we're taking a look at two ETFs that have a large concentration in these Magnificent 7 stocks, plus a handful of other big names, giving you one-stop easy diversification. So we're going to take a closer look at these ETFs, what their main focus is, and also what analysts are predicting for the future. Just before we jump into these ETFs, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. You can also download the TipRanks mobile app using the links in the description down below to make sure you have easy access to all your favorite investment research tools. Now let's get right into our two ETFs. First up, we're taking a look at the Vanguard Mega Cap Growth ETF. It trades under the ticker MGK, currently priced just shy of $270 per share. Over the past year, this ETF has grown 32% and has climbed 18% in the last 6 months. They do have a fairly low expense ratio at 0.07%. This ETF focuses in on some of the largest U.S. companies. This ETF seeks to track the performance of a mega cap growth benchmark index that helps get diversified exposure to the largest growth stocks in the U.S. market. They employ a passively managed full replication approach with their fund remaining fully invested. The CRSP US Mega Cap Growth Index that they track, it represents approximately the top 70% of companies in the US equity market. With 81 holdings in the ETF, their total assets under management stands at $18.3 billion. And it is heavily weighted in their top 10 holdings, with those top 10 making up 62.5% of the overall ETF. Down in our list here, of course, in those top positions, you'll see all of our Magnificent 7, along with a couple other big names like Eli Lilly and Visa. As you go down the list, a lot of other big recognizable names, including MasterCard, Costco, AMD, Netflix, and Disney. Down below, we can see the country breakdown with 100% US companies, and the largest sector being technology at over 51%, followed by consumer cyclical and communication services. Based on the holdings, there is a quarterly dividend as well, currently at 30 cents per share for a dividend yield of about 0.5%. Now, as you may be aware, Wall Street analysts don't give out ratings on ETFs specifically, but TipRanks is able to look at all of the analyst ratings on those 81 holdings within the ETF and give it an overall rating based on that. And the MGK ETF does come in with an overall strong buy consensus. From those 81 holdings, 71 come in with a buy rating and 10 come in with a hold. The weighted average price target comes in at $321, which would imply an upside potential of 19.5%. Down below, we can see the stocks with the highest upside potential, including Zoetis, Marvell Technology, and Snowflake, and the highest downside potential include Airbnb, Pioneer Natural Resources, and Paychex. Our second ETF today is a little bit smaller in size, but still has a high concentration in those Magnificent 7. We're taking a look at the Invesco S&P 500 Top 50 ETF. They trade under the ticker XLG, currently priced just above $40 per share. This ETF has climbed 28.6% in the past year and has also gained around 18% in the last 6 months. Their expense ratio comes in at 0.20%. The name of this ETF gives you a pretty clear idea on their investment focus, as they are based on the S&P 500 Top 50 Index, which is composed of 50 of the largest companies in the S&P 500. The fund plans to invest at least 90% of its total assets in securities that comprise the index. As I mentioned, this ETF is a bit smaller than the first one we looked at, both in the number of holdings and size. They currently have 55 holdings within the ETF and assets under management of $4 billion. But they are also very focused in those top 10 holdings, with that percentage coming in at 56.5%. And of course, we can see all of our Magnificent 7 here in those top 7 positions, followed by a couple others like Berkshire Hathaway and JP Morgan Chase. This is another one that you're going to recognize a lot of the company names like ExxonMobil, United Health, and MasterCard. Down below, once again, we have 100% concentration in country. Technology also the largest sector here, but a bit less at 40%, followed by communication services, consumer cyclical, healthcare, and financial. And this ETF also does pay a dividend, currently at 9 cents per share on a quarterly basis for a dividend yield of 0.89%. Looking at those 55 holdings, once again, we have an overall strong buy consensus, with 48 of those stocks coming in as a buy and 7 coming in as a hold. The average price target is just shy of $47, which would be an upside potential of nearly 17% from current prices. Down below, the stocks with the highest upside potential include AMD, Adobe, and Nvidia, while there aren't any stocks with downside potential. So there we have 2 ETFs, both with big exposure to those Magnificent 7 stocks. Let me know your thoughts on those stocks and these ETFs in the comments down below. I always love hearing from you guys. And if you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.